When you're starting a business, you really have four options to choose from. You can be operating as a sole proprietor, as a partnership, as an S corporation, subchapter S, or as a C corporation, subchapter C. If you're in a direct sales distributor business, the most preferred form or entity of business is the S corporation. The reasons? Twofold. Number one, the S corporation is designed specifically to help protect your personal assets from business liabilities. And secondly, it's designed to provide you, the owner, with significant tax savings. It might help to think of your corporation as a castle and a moat that protects a number of things. Your personal assets are kept safe from lawsuits people may take and make against your business. It also allows you to reduce the taxes you might owe on your total income in another type of business entity. Let's talk about taxes for a moment. Here's how a typical business distributes what it earns. Thank you. These are called gross revenues. It's where you start out. But every business has operating expenses that need to be deducted from gross revenues to end up with net income that it can then distribute to you, the owner, in the form of some kind of compensation. Usually that's considered salary. Now, here's an example. Let's say a company earns $150,000 in gross revenues, but it incurs $50,000 in expenses to operate, leaving it with $100,000 to distribute, and that would normally be passed through directly to you, the owner. Now, that $100,000 is taxable for income tax purposes. It is also taxable for Social Security tax purposes, which means that of that $100,000, you end up with only $65,000 to spend as you wish. In effect, your share and the government's share looks a lot like this. You don't get all of it. Is there a better way? Well, there is, and it's called an S corporation. You see, the S corporation allows you to take that same $100,000 in this example and distribute to yourself in two ways. One as salary, and another way in what's called a distribution. Let's suppose that you take $60,000 as salary and $40,000, all the remaining money, as a distribution. Now, both are going to be taxable for income tax purposes, so you'll pay the same as before. But Social Security tax is only due on your salary. There is no tax charged for Social Security on the distribution portion. And that means that, in effect, in this case, you would have an extra $6,000 more money in your pocket to spend in any way you like. This time, your part of the bill looks a lot better than the government's part of the bill. Why? Because you've used an S corporation. Now, a couple of guidelines here. The S corporation retains no earnings. Everything it earns, net after expenses, has to be paid out. For that reason, while it does file a tax return, it pays no income tax itself. Distributes the earnings it has after expenses to you, the owner, in the form of a salary, which is doubly taxable for both income tax and Social Security purposes, and possibly a distribution which would be only taxable as income, not for Social Security. The rules are you must take a salary, but you may take a distribution. And both, while being taxable as income, only the distribution is not subject to any additional Social Security taxes. So in this case we've been talking about, that extra $6,000 a year may go to certain places you like to spend your time, or with certain people you love a lot. But here's a thought. That extra savings in taxes that you're not paying to the government, you're keeping for yourself year after year after year, if you put that into a qualified retirement plan, you could be building up a nice nest egg that will allow you to spend your retirement years in a time and manner of your choice. And that's certainly better than most will ever expect. So to recap, to maximize your tax benefits, you do need an S corporation. It's going to be certainly good at protecting your personal assets from lawsuits against your business, but more importantly, it's going to help you reduce taxes on your total income. The S Corporation, to protect your personal assets from loss due to lawsuits, means you need to transfer ownership and title of your vehicles into your corporation's name. At the same time, you must hold ownership of insurance policies in your corporation's name because it has the insurable interest in that property. And you'll want to use a registered agent to help you maintain compliance with all state and federal statutes. And finally, you'll want to operate your business, as a corporation, which means you need to hold corporate meetings. But where and how you hold those meetings doesn't have to be all that bad. You're also going to need to record meeting minutes, notes, if you will, of what happened, what was said, and what was decided. You'll need to file documentation in a timely, accurate manner, and you'll need to maintain compliance with all federal and state rules applicable to your business and your state or states in operation. Now, if you would like us, DSD Insurance, to help you incorporate your business if it's not already, well, just give us a call. You don't even have to break the glass, but you do have to give us a call at 866-621-1770. We'll help take the amazing complexity of getting started in a corporate business out of the way for you. We do the heavy lifting so you don't have to. And that way you can look forward to a nice retirement and many other benefits because you've learned how to adopt and use an S corporation for your business. Thank you for being with us today, and we hope you've enjoyed How a Corporation Protects Your Personal Assets and Helps You Keep More of What You Earn, one in a series from DSD Insurance.